Stocks are surging. Bitcoin should follow. China and America reach a 90-day trade truce this weekend at the G20 meetup in Argentina. The big news over the weekend is that America and China have agreed to a trade war truce for 90 days. This has shot the SPY SP500 Index ETF up $5 over the weekend, which is a huge jump and will likely help lead a bullish stock market to close out the year. With the 2020 presidential election around the corner, Trump is now under great pressure to close a trade deal with China to help improve his chances for re-election. Meanwhile, the Fed has also hinted that it will stop increasing interest rates next year, which is also very bullish. For cryptocurrency investors, this is all good news in the short term, as it may help relieve the flight to safety November's market rout brought to markets. In general, cryptocurrencies are treated as a highly speculative technology stock, and its movement is often correlated to stocks, although this is not always the case. Today, Bitcoin price continues to slump after jumping to $4,277 on Saturday. And as you can see, down 6.5% in the past 24 hours. Stocks are also giving up some of this price jump this morning. However, I expect overall that stocks and cryptocurrencies will go up significantly to close out the year. Don't forget, a final round of corporate stock buybacks are about to flood the market and close out the year. And so in this chart, we can see the SPY ETF jump from the 275 level to 280 this morning. So what are the downside risks still on the table for Bitcoin? Number one, miners around the world are going out of business and liquidating positions to recover some of their losses. This trend may continue as long as Bitcoin is below 6,000 until the hash rate drops dramatically. The hash rate did just drop 15% in November, a record in recent years. So the pain may be coming to an end soon for the best miners. Number two, Bitmain and CoinGeek potentially took on losses greater than they can actually swallow from the recent Bitcoin cash war, and they are both heavily dependent on a healthy Bitcoin mining market for survival. Will one or both of these giants go under and cause yet another 50% asset crash in cryptocurrencies? If the hash rate drops and the Bitcoin price jumps, they'll probably both be okay for now. But if that doesn't happen, watch out. There could be more pain for miners ahead. Number three, there's some 1,500 altcoins listed at CoinMarketCap who raised money all too easily, ambitiously, and foolishly went on overzealous spending sprees and are now starting to run out of money. We just got an announcement from Steemit that they're laying off 70% of their staff due to poor cryptocurrency conditions. This trend can cause panic Bitcoin liquidations and quite likely knock out a great deal of weaker altcoins in 2019. Now don't forget, Amazon was once in this very speculative tech category and lost 96% of its value in the dot-com bubble crash of 2000. It only takes a handful of altcoins making it big to make up for the majority of your altcoin positions going to zero. And that's if you have a smart, diversified, and balanced investing strategy. Mt. Gox still has 162,000 Bitcoin to potentially liquidate at any moment. And in 2018, they only sold 25,000 Bitcoin in Bitcoin Cash for around $230 million, which is only about 12% of their total supply of Bitcoin. This guy in charge of the estate could crash the market at any time he wanted. Now, does that mean he wants to? Most likely not. So could we potentially crash another 50% from here? Yes. Will we? Who knows? Flip a coin. We might not. Tomorrow's update, I'll discuss why investors should be aggressively building a position in cryptocurrencies right now. Bitcoin is not a bubble, it's the pin. Here's a snapshot of our two model portfolios, which are down around 20%, which I'm not worried about. The basic portfolio trades all of the yellow coins, which are common cryptocurrencies held by most cryptocurrency investors. And as you can see, it currently holds a 46% target size in Bitcoin, 24% in Ethereum, and 8% in Ripple, making up most of its portfolio, and then has positions of 8% in Ripple, 7% in Litecoin, 1.3% in Bitcoin Cash, and a few other positions in other leading cryptocurrencies. The Diamond portfolio is for much more advanced, long-term, and wealthy investors with at least a current value of $25,000 to put into cryptocurrencies. This strategy invests in every cryptocurrency at Binance and IDEX, expanding the diversity and reach to hundreds of altcoins not held in our basic portfolio, which has coins that typically common investors of cryptocurrencies already own. Its position size in Bitcoin is a bit smaller at 35%, same for Ethereum and Ripple and the rest of the yellow coins, but it picks up a large position in EOS, Tron, Cardano, Neo, and many other popular coins held at Binance. Here's some of the best images floating around on Twitter today for your enjoyment, and look for a new update tomorrow. Bitcoin facts: 70% of energy used is renewable. Better to catch criminals than USD. Look at Deutsche Bank being exposed for doing billions of dollars worth of money laundering with all the other major bankers in the world. It's the best performing asset in the past 10 years. Bitcoin beat the SP 500 since inception. 2 times more wallets created in 2018 than all previous years combined, even during a bear market. Facts matters, narratives don't. Bitcoin job growth continues to outpace cryptocurrency prices. And this is primarily from institutional investors funding private companies who will create the infrastructure to serve digital money of the future. Bitcoin trading volume, $2.2 trillion in 2018 compared to $870 billion in 2017, only $31 billion in 2016 and $12 in 2015. So you can see it is growing exponentially year after year, bear market or bull market. Meanwhile, all shit's breaking loose in France with the yellow jacket movement, and this guy wrote "Buy Bitcoin" on his yellow jacket. It's gone viral on Twitter. If you haven't already signed up, go to portfoliobuilder.io. For a limited time only, test drive our premium cryptocurrency buy and sell alert platform free for 90 days. There is no credit card required. Once you sign up, you get access to our platform, you get access to a ton of training materials, and you even get access to free one-on-one webinars with an education team who has handled incredible amounts of cryptocurrencies in the millions of dollars. So thanks for your time, and look for a video tomorrow.